Hello everyone, how are you all? Welcome back to another episode of the Financial Freedom Series with your host, Uncle Robin. I hope everyone is healthy and well. But tonight's section is like step up from our previous episode where we get a little bit more the technical in our conversation about investing. So our previous episode, the topic all very general one But this one, right, we need to step up to something more in depth like from secondary school, you go to university, got improvement right? So tonight, let's welcome back our guests, Mr. Money and Frankie. Hello.
Hello.
Hey,
Hi.
good evening,
Hi, what's up?
How are you all?
Robin.
How are you all?
All
Good. How about
All
you?
good. It's so nice to see you all again. Hey, tonight Olympic opening war. Do you manage to see or not? Anything?
How to see where got time?
Where got time? So you are saying that your time should use to find money correct?
And to talk to you also, Uncle Robin.
Wow, yeah, very important. You get to meet Uncle Robin, so I can see Frankie, you also put on your cap. Is it because long time no cut hair? Your hair very long.
Absolutely correct. What to do now? The door is not open.
Yeah. Okay. You know from our investment episode previously Uncle also thought it's a good time to invest in something Can you all see anything different on your screen now?
What?
You cannot see because you know why? Uncle also invested in something, a brand new camera. So now you guys can see Uncle's handsome face better in HD way.
No wonder so handsome lah.
Nobody respond. Hi, you all no good taste But never mind. We don't talk about that. Let's go and talk about our tonight punya topic. CTOS. All you need to know. Okay You know, previously, if you all recall, we have already covered something on stocks and then on dividend. So tonight we want to talk about IPO stocks today. So, Mr. Money and Frankie, what is IPO and how does investment in IPO stocks actually work? Maybe Mr. Money, you want to start first?
So basically, for those people who are quite new to the stock market or you haven't invested before, right? Remember last time back in school, we always study about companies, right? And then we always talk about when company, there are three levels of company. Generally, the first level is what we call a sole proprietor or either partnership, okay? Which is like, for example, I myself go and register a company and then I'm the only owner like that. Yeah. And this kind of company is what we call fully liable. So if anything happens to a company, I will kena lah. Then after that, you step up one step further, it's called private limited. Yeah, which means the company is an entity separate from the owner, right? So, but it is private. Why is it called private? It's because not anyone can invest in this company. I have to privately extend the invitation for that person to come and be part of the owner of my company. So if let's say today I start a company, like for example, Mr. Money TV Sendirian Bahat, and if I like Uncle Robin, then I come to Uncle Robin, hey Uncle Robin, you want to be a business partner or not? But then you invest this amount or I have some terms with you, then I put you as an owner. Now, but if let's say anyone out there watching this and they say, hey, Mr. Money TV, very good, your company, can I invest? I can always say no. Right? I don't want you to invest in my company. Then I just walk off, right? Then you move up one level, right? Is what they call a public company, which means anyone can invest in this company. And this is where you see these companies on the Bursa Malaysia, where anyone can buy a share of the company, which represents an ownership in the company freely on the stock market. No one can stop you for that. Now, so generally, why is it like that? Is because usually, let's say, for example, Mr. Money TV, today we are expanding and then we are doing quite well. And then eventually we realized like, hey, there's a huge market out there. So we want to grow. But then, right, in order to grow, we need a lot of money. So how do we raise this money to grow? And after thinking about it, I don't want to borrow money from the bank. I want to raise it through what we call an IPO, which is getting money from public people, putting my company up on Bursa so that anyone can own my share freely like that. So that is generally the concept of an IPO. So the main purpose there is actually to raise fund. I believe on this side, Frankie, who has a huge experience in this area, will be able to explain even further.
Yes, Frankie. So to start off, so this IPO means for initial public offering, correct?
Correct.
Okay, Frankie. What else you want to add?
Okay, so as the name suggested, it is initial public offering. Initial means first time. Public means like what Peter mentioned. First time the company is going to public offering, of course, offering of company stakes to the public. So that's why it's called initial public offering. To add on the point on why companies choose to go IPO instead of raising funds privately or go to the bank. First of all, if you borrow money from the bank,
Sorry, hey, Frankie.
Sorry to cut
Sorry,
you.
stop you, your mic.
Yeah.
oh my keep on shaking.
Yeah. Your mic is actually breaking.
Oh, sorry. Now,
Yes.
now better?
Sorry again.
Is
Still
it
breaking.
better?
Still
breaking.
It's still breaking. Yes.
Still breaking.
It's
hold
like
on,
your voice is like uncle last time go cup piling palang. Music.
Yeah. Okay. Now is it better now?
Yes.
Okay. I changed microphone. I use my laptop microphone better.
Okay.
Okay. Okay. Why companies don't borrow money from bank? It's because when you borrow money from the bank, obviously the bank also need to survive, right? The bank also needs to earn money. So the banks are going to charge you a very hefty interest rates. And very typically when companies go and raise funds, it's a huge amount of money. It is not going to be 1 million, 5 million, or 10 million. It's going to be like from tens of millions to hundreds of millions. So if you calculate the interest alone, sometimes the profit of the business cannot even cover the interest expenses. So it doesn't make sense to go and borrow from the bank. But then the company needs to grow. So where to get this amount of money? Right? So one of the method is to go to IPO, because when you raise money from shareholders, you are not obliged to pay them back the capital unless the company makes money and unless the company has a dividend policy, right? If these two criteria is not met, then technically speaking, once the company takes the money from the IPO proceeds, it has no obligation to pay the money back to the shareholders. So in a way, it gives the company more leeway and more freedom to be able to raise the money and use it more freely to grow the business without the worry that it needs to come up with cash to pay, or rather to service the interest. So that is the main difference between IPO and borrowing.
So it seems like this IPO thing sounds very, very interesting. So as like our topic tonight say, we are going to use CTOS as an example or like a case study to see how we can actually evaluate an investment or a company before we actually go and actually invest into a particular company. Now, this session, Uncle Robin with Mr. Money with Frankie, we are not giving you any so-called financial advice or asking you to go and invest into whichever company. This one is Uncle Robin miss Mr. Money and Frankie too long. So this one is like talk fun sing song session, okay? So all of y'all here listen and then you all make your own judgment just to make this clear. Okay, like tonight's topic, we want to use CTOS as an example or case study on IPO investments. Okay, so let's just talk a little bit more about CTOS. Okay, uncle only know about CTOS when uncle want to buy car lah, maybe want to buy house lah, you know, need to go to the bank lah, apply for loan. Then this CTOS always appear in front of uncle's face. Or you need your CTOS report lah, this and that. So okay, let's talk more about this CTOS as a company. What does it do lah, and how does it fare currently? How they are performing, and then are there any competitors or not? Maybe Mr. Money, you want to start first.
I think like exactly like what Uncle Robin said, right? CTOS mainly is actually a credit reporting agency. Now we did a video on it just I think last week, right? Frankie, last week, right? Yeah.
Right.
So we've got our new channel called the FAQ show. Yeah. So you guys can go and check it out. Yeah.
Why you don't want to say the real name? It's more catchy. The real name is more catchy.
Okay, Uncle also watched that video. Wow. Luckily, Uncle, the small children not nearby. Later they learn that word. Okay. But that word may sound wrong, but it does not mean that meaning. Maybe, Frankie, you can share the title of your program.
Can this is Astro, no?
Go ahead, but you need
Alright.
to explain what does it mean.
Right. Okay. So to streamline the content between Mr. Money TV and the rest of our content going forward, we have created a new channel, and this new channel is called the FAQ Show, the FAQ Show.
Wow, wait.
Right? Oi, what?
Uncle listen so many times. Uncle also scared. This one. Okay, can you explain further?
Explain further. Okay, so the FAQ show, the FAQ show, right? Everyone would think of frequently asked question. While that is correct, but it also means Frankie answers questions, right? So it has a different meaning to it. So therefore, we choose the name for our new channel. So if you are free and if you want to learn more about stock market investing, feel free to go there. We will have videos upload every week.
Yep. So you all know the FAQ show is not that one it's FAQ, Frankie answer question. So in that video Frankie already talked a bit about CTOS and evaluating CTOS as an investment. Okay, Mr. Money, maybe you can proceed again and talk a little bit more about CTOS.
So actually,
everyone think about the FAQ. So okay.
Start over.
Yes.
Oh my God. I think later before Frankie start, he should do his FAQ show introduction.
no need lah. Hi say.
That's the way the children remember us these days. Okay, let's not drag too long, right? I would like to ask anyone who's watching this right now, the participant, any one of you invested in IPOs before, or you have experience in stock investing? If you have, just write one for us in the comment, or write me as well, right? Yeah. Now, when we talk about IPO, very often people are really very excited about it. And this time round, when we look at this IPO called CTOS, right? To be honest, it's not a very exciting business. It's just a very boring business to a certain extent, like what Uncle Robin said, right? At the end of the day, you never really hear about this business one unless you plan to go and get a loan now. So it's mainly a credit report business where you check your payment, your payment records. Are you a good paymaster or not? Why? Because when bank will borrow you money, when bank will lend you money, they want to know whether you have the habit of paying back or not lah. If you don't pay back, then why won't I lend you money, right? It's too dangerous. So in the past, right, no one keep a centralized record. Okay, only bank got. So what this CTOS fellow do is that they just go and pull out all the data, and then they compile it, they send it over to whoever requests for it through fax. But then subsequently, as days go by, things are more advanced. Then they started going to the technology side. But what's really interesting about CTOS, right, is actually the fact that there is this very exciting man behind, the very same man who actually listed Mr. DIY, right? And so that's what made CTOS such an exciting business. But overall, nonetheless, CTOS does have this beauty in terms of, if you look at CTOS itself, because whenever you want to take a loan from a bank, then bank need to get at least your CTOS report. So every time they use that service, they get charged, or either they pay a yearly subscription kind of thing, right? Yeah. So generally, the good side is this: all of you will be CTOS customer, either whether you like it or not, at least at this point, right? Yeah. As long as you want to take a loan, you will somewhat be their customer. Yeah. And on the other hand, because of that, this is a business model that can spread across the whole Malaysia and everywhere else. Yeah, but that is a very short version of what we are looking at lah, and we shall not go too deep into the man behind it first lah, which I think there's a time for it.
We are definitely going to talk about the man behind it lah. But uncle really want to know every time we go bank we need get a loan, then we need to go and so-called engage this CTOS. So actually this CTOS in Malaysia got competition or this CTOS pau kaliawan means semua dia main. Also have to go through CTOS. Maybe Frankie, you can share a little bit.
Okay. This credit reporting business, of course, there are more than one players, because without that, then CTOS is the monopoly already, right? There are four major players in the market. In fact, one of the credit agency, the credit reporting agency is owned by Bank Negara. It's called CTOS, right? I'm sure many of you heard of CTOS before. There's one more company called Experian, right? Which CTOS actually own 26% stake in this company. One interesting point is that this Experian is the second largest credit reporting agency in Malaysia. And then CTOS is the Malaysia's largest. So as you can see, CTOS as a credit reporting agency, right? They are like what you say, Uncle Robin, is that they're sort of like pau kalia already, because number one, they are the largest with I think 70% market share. And then after that, the second largest company, they also own 26% stake in it. So it's sort of like pau kalia. But having said that, there are still competition in the market. There are big four in the market. So it depends on the banks to choose which credit rating agency that they want to use. But generally, all their functions are the same, is to provide that credit health or the credit score of a person, a company, or an organization. Then from there, the banks can evaluate whether this is a good paymaster and whether they want to disperse the loan to you or not.
So basically, I think everyone here will understand how CTOS work and how CTOS make the money Okay, just a quick statement here. CTOS actually went listed this week Monday, last Monday only. They actually went listed on 19th of July. So just to put it out there, when Uncle heard the news, Uncle said, wow, CTOS also go listed. And Uncle also found out CTOS is actually the largest, correct me if I'm wrong, CTOS is actually the largest IPO exercise this year, 2021. Correct. So for me, Uncle Robin find very amusing they go on IPO and all that. And also in your FAR show, Frankie, you also touched about the so-called one of the major investor or stakeholder in CTOS So, and also just now, Mr. Money also touched a bit about it. Maybe you want to talk a little bit about this mysterious person that maybe a lot of people I think here maybe don't know this person. Maybe you can talk about this mysterious
person. About this person,
Yeah, who is this? Is he Malaysian, or is he a genius, or is he, I don't know, magician or what? I don't know Or maybe he's like Uncle, I don't know.
This guy, he's a very smart gentleman. His name is Bramal, and he owns a private equity company called Cradle. Cradle was founded, if I'm not mistaken, 2011 or 2012. At that point in time, they make a very strategic investment in Old Town. I'm sure everybody knows what Old Town is, right? Just 1 year after that company was set up, then they invested in Old Town, and then subsequently, just within 1 year itself, Old Town was aggressively expanded to a lot of things. They opened up many restaurants. They ventured into more FMCG, that coffee powder production. They even start setting up stores in as far as China. So within a year, they are able to cash out a small portion of the Old Town stake, and that has already made him double the money. So immediately, this guy become the legend in the investment society. Then from there, whenever Brahma makes a new investments, it becomes a headline on the news that, oh, you know, this guy is buying this already. Is it going to turn the business around? Is it going to expand it further and then create more value for shareholders and things like that? So that's a very brief introduction on Brahma. Peter, you have anything to add?
Well, before that, Uncle Phil, this Brahma guy, he's Malaysian, right? This Brahma guy, I got a feeling like, you know, the Malaysian Harry Potter, like magician. Everything he touch, or maybe he invest, usually can jadi one. Before tonight's webinar, Uncle actually got watched the Fark show. And I realized, Frankie, you say a few things about this Mr. Brahma, that usually he go into businesses that is called, quoting what you say, cookie cutter business. You can talk a bit more about this cookie cutter. I don't know lah. Uncle eat cookie, Uncle see cookie, Uncle eat cookie. Uncle haven't cut cookie before lah.
You haven't cut cookie before. I think cookie cutter business better let Peter to explain. I think he has a better angle to explain this cookie cutter business.
Go ahead.
I think at the end of the day, when you want to look at businesses, if you look at the way he invests, yes, we quoted this thing called cookie cutter as we were, you know, writing the script at the time and stuff like that. The idea here is this. If you notice Mr. DIY, you notice CTOS, you will realize one thing. The business is very easily replicable. So imagine, right, when you make cookie the time during Chinese New Year or Hari Raya, right? What do you do with the cookie? You take that cookie cutter, you just chop. Then everything looks the same, right? So it's very easy. Now, so you notice that his business is the same one. Mr. DIY, everyone can be their customer. The whole idea is cheap stuff, right? Who don't want cheap stuff? You go to Japan.
Uncle like cheap stuff, really. Uncle also like cheap stuff.
Right. You go anywhere, you go into Africa also, people want cheap stuff. Now, then you look at CTOS as well. It's the same thing, right? Everyone needs a credit report whenever you want to deal with a bank, right? So basically, again, everyone needs it. Now, then if you look at previously like Old Town, all those it's same one. It is things that everyone needs, right? And if you look at the business model of the kind of company he's looking at as well, it's also very straightforward. Nothing too complicated, very straightforward, easily replicable. You don't need some super high-tech stuff with crazy IPs like Facebook or whatnot. No, literally it's like quite easily managed no matter who you put in, as long as the strategy is there, the blueprint is there. Yeah. So
as easy as making bubble tea.
Yes.
Bubble tea. I don't know lah. Bubble tea, the only bubble tea Uncle Robin make is in the toilet only, so don't know lah. Okay.
No, the reason why we say that is because recently Credo bought a 30% stake in T Life Loop Holdings. So a lot of people are expecting Credo to expand this T Life brand to more places and then eventually come to IPO as well.
So when you talk about this Credo, with Uncle limited knowledge about this, there are actually quite a number of so-called this private equity firm around. But what makes Credo a bit unique compared to other, you know, private equity firm?
Okay, so they have a very, very strict investment criteria. So companies that are too small, they won't invest. Companies that are businesses that are too complicated, they also don't look at it. So they only look at companies whereby it is there, but it needs a final push to make it happen, that kind of company. So Old Town at that point in time, 2011, it was already established. Everybody already know what Old Town is, but they just need that final push to bring the product out of Malaysia. So that's why Credo like this kind of idea. Same for DIY as well. They have expanded so many outlets in Malaysia. So with Credo coming in, they managed to bring them to overseas, and they also come out with different brands. Like there's this shop, the new one, the blue color one. I can't remember what is it called. Two ringgit shop, dollar shop, or something like that. So those are new things that are brought to life, and then CTOS as well. It is big in Malaysia, so they want to replicate this model in Thailand and also in Philippines. And then finally, with this T-Life business, it's the same modus operandi. They are going to give T-Life a final push so that it can be ready for IPO. That's how they make the big money.
So basically, from an investor point of view, if Uncle want to invest in an IPO stock, so can Uncle say there are actually a few things to look at. One is the industry the company is in. How strong this company in terms of market cap in the environment. How strong they are in the industry, or can the industry actually do well in the current economic climate. Two, maybe you also look at the back office, who is actually the main investor or the key management to actually run the business. Is it correct for investors to actually look at these few things?
Okay. From my point of view, because my point of view doesn't mean that it is the correct answer. It is just my answer. When you look at IPO, right, this company has no track record in the sense that because it was not listed in the past, so all the accounts was privately held, right? So, but in order to go IPO, you have to launch a document called the Prospectus. And inside the Prospectus, they will include 3 years of past years financial performance. So that is the only clue that you have for the company that you potentially would put your money in, correct? So it's all based on that 3 years past performance, and then you evaluate what kind of industry this business is involved in, and then you forecast what kind of result they may do going forward. To couple with that, you have to think of who are the managers in the company. Do they have a vision to bring this company going forward? And would this actually amplify your forecast numbers to maybe 10% or 20% higher, right? So all of this will play a role when you do your evaluation on IPO stocks to help you to see that whether at the price that they're offering you, whether it is fair or it is cheap or it is actually quite expensive already. So I will need to be careful when I put my money into the stock.
Okay. Now, Frankie, you spoke about the prospectus, a very nice flow. Now, the next question is, okay, like you said, when a company wants to have an IPO exercise, they must come up with a prospectus. Like you said, there are actually a lot of details inside, and then there are some financial numbers inside. Okay, the prospectus are very thick one, like hundreds of pages. Maybe Mr. Money or Frankie, you can help the people here on what to look at when you want to invest in a certain company, and on the prospectus, what you want to look at. Let's use CTOS as an example. Now, audience who are here, this will come a bit technical. Okay, all right, maybe Mr. Money, you want to start?
I think having said this, right, just to also continue a little bit of what Frankie earlier mentioned, because at the end of the day, when you want to invest in an IPO company, you have to think of it this way, right? that an IPO company is kind of like if you think of our human life perspective, it's like as if you just graduated from university and then now you go into the workforce, right? So it is not the ending. It is actually the beginning of your biggest growth. But I kind of already take care of you as a private person all the way until finish grad already. So kind of prove yourself a little bit. Then now let's go to the big boys world and play, that kind of idea, right? So one of the things that you want to look for is actually, is this company going to grow? Yeah. Although at the end of the day, even if it's a super mature company, like what a lot of people will always say, right? Especially Frankie will always say this, everything has a price, right? So you need to study the price and so on. But I personally, I like to look for company that has a huge prospect of growing in future, right? So one of the first things that I look at is actually the kind of business they are in and where are they exactly in this whole industry. So let me give you an example. Certain business are more complicated, like for example, the tech industry, right? If you look at their prospectus, they will have to tell you exactly which part of the supply chain are they in, what are they involved in, what are the processes, are they involved in the packaging, the soldering, the what, or the testing, you know, those kind of stuff. But if you look at CTOS, CTOS is pretty clear cut one. That's why you see Brahma's company, the the prospectus, when it comes to the industry they're in, is very easy to read. Now, what you want to pay attention to other than this, right, is the risk that they potentially will face. Now, as usual, they will tell you their risk in a very textbook manner. What do I mean by that? It's like, you must understand the prospectus is to sell you my company, but I'm obligated to tell you certain things that I think you need to be aware of, especially the risk. It's obligated one. But now, I will need to put it in a very nice language so the risk doesn't feel that risky. So as a smart investor, right, you need to be able to read in between the line and read through the line and ask yourself good questions. Like, are they showing you the nice side, or is it really, you know, something you need to pay attention to, right? Because they're also going to mix it up with the general risk statements like equity can lose money, right? Like who don't know, right? You invest in stock, you sure know that statement already, ma. So but then everything is so thick, so long, you want to read everything. Like, let me give you an example, right? When it comes to CTOS one, there was this huge talk about like they want to grow their business outside of Malaysia, which we already know in Malaysia they are already very saturated, ma. So one of the biggest excitement is they bought this Philippines company last year, right? So as people are talking about it, everyone were very excited because they look at Philippines, and based on the data given, we know that Philippines is the fastest growing market when it comes to credit score. And we also know that Philippines is least saturated. So there's a lot of potential, right? Then I told you that last year I just bought Philippine companies. Then everyone get very excited. But then if you don't read the risk part properly and you don't read how they are going to structure that IPO, right? Then you may miss out this one part. They actually just wrote in one line, the Philippine business is not inside this listing, which means that
it wasn't even listed in the risk. It was just one. It's just hidden in one of the paragraph.
Correct. I can't remember it's in which paragraph. I'm not sure whether it's a business side like or something like that. But it was just one small mention, right? But in every of their public presentation, they also talked about it quite a bit because these are very important data. So the point I want to say is this: while there are a lot of things that are very general looking, but you really want to pay attention to important details. But how do you know the important details are important? There is a combination of, number one, you either read through everything, every single word, right? Number two is you have the experience to sniff out like what are the things. Like for example, I think sometimes like for someone like Frankie or for someone like us who have been looking at the market for a while right now, right? Sometimes we know where to like look a bit, where to look for hints. But generally, I would say if you never read a prospectus before, I would encourage you to read the whole thing from top to bottom at least one time, so that your next company you will get experience already. So mainly the risk, the business that they're operating in, and then read through the whole company structure as well.
Okay, maybe for Frankie, this one can be a little bit technical. So if Uncle is saying this right, are there some things or some numbers or percentages like indexes or whatever in the prospectus that maybe everyone also can see, but those are key indexes, key percentages, and key numbers. Like for example, the PE ratio. Maybe Frankie, you can talk about it a little bit more.
When a lot of new investors receive a new prospectus, they will think like, oh, this is a very technical document, and therefore I would need to read all the numbers because numbers look very technical and look very smart. But if you think about it, right, all the numbers in the prospectus are history of what they did in the past. But does the past mean that it is going to be the future of the company? No, right? So technically speaking, whatever that is stated in the past has got no correlation with the future one. So the only usefulness of those data, like you say, what historical PE lah, what kind of number is all that, right? It's just for you, it's just to help you to find a position of that potential company in the market. Who do you want to compare this new IPO company with, right? So for CTOS, the market cap is about 2 billion, PE is 63 times, blah, blah, blah. So where do you position CTOS with in the global market, right? So in terms of the global market, this credit rating agency typically trades around 30 over times. Market cap is around a certain size and things like that. So when you compare 30 over times with CTOS coming to the market with 63 times, then immediately you know that it is going to be leased at quite an expensive valuation. And this is based on history, not the future. And then also there's an article from The Edge stating that if they are able to register 70% net profit growth this year, then the PE valuation will fall down to 30 over time. So it becomes the market average. And the market gets very excited about it because I just need to tahan for that 12 months for it to be in line with the market. And because of that substantial growth that will make the PE drop from 60 over times to 30 over times, means if you follow the same trend, it is going to be 15 times the following year, right? Whereby the market will probably still start at 30 over times. So if you buy it at 63 times today, you tahan it for 2 years, potentially it can go down to 15 times. So with that kind of publicity and that kind of numbers that in a lot of all this publication and all that, so it gets people excited, and therefore a lot of people jump in and subscribe to the IPO shares. Yeah. So to me, the numbers is not so important. It is just something for you to guide you to find a position for the company in the market, because the market is a very big place. But what is more important is to pay attention to the managers of the company, because ultimately it is the people in the company that can bring the business forward. So what kind of experience does the CEO has? Where is he from? Does he have any track record and things like that? So all this plays a role in terms of how is this business going to be carried out going forward. So to me, that is the more important partner, instead of just financial numbers.
I think
yeah. Please go ahead, Mr. Money.
Yeah, I forgot to mention one point as well, and I thought it's very good to add in here, is that I think instead of paying attention to PE and stuff like that, right, what you want to pay attention more towards is like what Frankie said, the management. And then on the other hand, is also who are their customers, and are their customers also growing? Yeah, because if your customers are growing, means the demand for your product will grow, right? And then another one part is actually the industry itself. Do you think that the industry is encouraging the growth of this particular business as well? Right? Like for example, if let's say it's an industry where within 2 years, people will just come in and take over your position already, then beginning already not very good already, then how are you going to defend yourself? Yeah, so here is where you want to pay attention to all these kind of things, and it will be more important than the numbers, because management you need certain access only, you really get to know who are the management. But when it comes to who are their customer and so on, it's easier to find hints inside the prospectus itself and the industry growth and stuff like that. It's easier to Google and research. Yeah, but when it comes to who's the manager, are they good or not, that one you have to come and join us on our next corporate day.
We sort of talk about the risk of CTOS in our video. So if you want to find out more, please go and watch the video on the FAQ show channel.
Hey, having said that, Brahma used to work for Astro there.
Oh yeah, your boss.
Hey,
Yes.
Mr. Brahma used to work for Astro. Don't play.
Okay. Before we actually go next, we actually got this one question. This will sound like, I don't know if Mr. Money or Frankie can actually try and answer this question. Now, this question is from SRK Lover 19. How far do you think CTOS can go? Okay, this one, correct Uncle if Uncle is wrong. So CTOS on 19 July, they actually listed at, they actually peaked, I would say, at $1.64. So today, Friday, market close, it was at $1.53. So what do you all think? What, I mean, like I said, SRK Lover 19, this is based on only personal opinion. This is not a financial advice, ask you to go and buy or whatsoever. This is just me, Uncle Robin, Mr. Money, and Frankie just borak talk for fun and sing song. Okay, so what do you guys think?
I don't think we're in a position to answer that question, because even though you make the disclaimer, right, SC won't let you go if you give a fair value and a commitment to say whether it is a buy or a sell.
Yes.
So
Maybe, maybe I'll say this. I think since they are a company, right, they can go very far, as in like they won't die, because they will just be there on the Bursa Malaysia for a very long time until they choose to release, right? So they'll go very far in that case in terms of longevity. But if your question is how good do you think the stock will perform, I think instead of us telling you whether the stock will perform well or not, I would always say we did a quite an review about this company on our YouTube channel, the FAQ show, right? Yeah. And on the other hand, maybe we can just mention a little bit about some of the areas that we think you should pay attention to.
Yes.
So maybe to help that, maybe I'll just mention one and then Frankie can mention one, right? Yeah, each one.
Uncle also interested to see what is your view. Okay.
I think number one, I'll talk about the industry itself first. I think that if you talk about the business model of CTOS, I think it's a fantastic business model, good profit margin, because you just print things out only, everything is data, right? So margin is good, and it's also a fantastic business in terms of every bank will use their services. Now, is it here to stay? I think it is definitely here to stay. On top of that, they also have a share in their second largest competitor, which is, just the second one itself. So kind of like they already defended their position very well, right? Now, but one thing is maybe you want to pay attention to is try to think, how will the future of credit reporting be in terms of the industry itself, right? For example, when people talk about, like for example, in the past, print media like newspaper, all those were doing very well, right? But then over the past few years, if you see, like if you were standing at 10 years ago when internet just started like becoming even more and more famous, there were more and more digital media companies. And then if you were standing at that point, newspaper was still selling very well, magazines were still selling very well. But if you know how to forecast into the future, you may be able to foresee that like print media will slowly lose its market share compared to digital media, right? And we noticed that those who actually position themselves in a good position, today they are very big digital media companies, right? And instead, those big companies who didn't change, instead slowed down and didn't grow as much, right? Yeah, that's the case for traditional media versus digital media. And if you look at CTOS, you must understand the purpose of CTOS is actually to help people get a reliable, to help banks or financial institutions have a very reliable idea on how good is a person in paying back money, right? Now, so let's think about it. People are extremely creative today, right? So who else in the market holds a big amount of this kind of data? In my opinion, Shopee holds a big amount of this data. In my opinion also, Grab also knows exactly how well are you in paying. In fact, I would even argue, right, that people like Shopee, Grab, they know you got money or not even better than Bank Negara to a certain extent, because because there are some people who look like they have no money, right, but they can buy a lot of stuff, you know. And they can eat a lot of luxury food, but in their official bank account, all no money. So how do you know people really got money or not? In fact, Grab, all these have a better idea to a certain extent, right? And I was just reading an article on FinTech News Malaysia. Okay, so don't quote me. It's FinTech News Malaysia. Yeah, I trust that publication to a certain extent, to quite a lot, because I kind of know their reputation in the digital field, right? And they mentioned about this company behind Ringgit Plus, who all of you all know Ringgit Plus, right? And even Ringgit Plus themselves developed something, this thing called X score, which is their own version of credit scoring.
Yep.
Now, if you actually look at it, right, although we think that CTOS competitor is 4 people only, 3 to 4 people, including themselves, 4 right? But now if you were to expand all this, right, although these people are not competing with them yet, they can potentially and quite easily compete. And if you think about it right now, Grab all this coming up with like buy now, pay later scheme. In 4 months, they will know whether you can pay back money or not. So
that is a very, very good point, because uncle also thinking, you see, yes, CTOS is very saturated here in Malaysia. So their vision is actually to go overboard maybe ASEAN countries. So within the ASEAN countries, like Frankie has mentioned just now, in the Philippines maybe, in Thailand maybe. So locally there, do they see any barrier to entry in terms of competition locally for CTOS?
Okay, I always say investment is not a science, it's an art. Well, why is it an art? When you see a drawing, some people see, oh, this drawing is very nice. But some people will see, oh, this drawing is very ugly, right? So when you talk about CTOS and its business, it is in a business in Southeast Asia. And the problem with Southeast Asia is half of the population is unbanked, right? Why they are unbanked is because maybe they are not financially literate. So they don't even know that the money that they earn, they should put in a bank instead of keeping under the pillow. So people who are unbanked will never have a credit score because they have no financial records, right? Everything is by cash and all that. So they are not inside the system. So therefore, it is very hard to retrieve their data. Now, because investment is an art, right? You can argue that this unbanked population is going to be the potential for CTOS to grow going forward, because as education gets better, as more and more become smarter, they know that they need to put their money in the bank. So the unbanked population is going to be smaller and more people put their money in the bank. So when this population grows bigger, the demand for financial products will increase. People will start borrowing money more. So therefore, they require more CTOS services to get their credit score up, right? So from this perspective, it's a bright future for CTOS, because with just 50% of bank population, they can do this amount already. What if it is 100% of bank population? The potential is double, right? But on the other hand, from another perspective, then it will be like what Peter has mentioned just now. There is a lot of all these tech companies like Grab, like Gojek, like Shopee, who is trying to tackle this unbanked population, because they know that these people, they don't have account in the bank, they don't have money, or they're not eligible to open an account or things like that. But they can always put their money into all these e-wallets. And from these e-wallets, they are able to mine all this data. So this unbanked population can potentially continue to be unbanked because they don't need a bank. All they need is to just have that 3,000, 5,000 ringgit for them to survive the month, right? So, so as you can see, one title, bank and unbanked population, can have two different conclusions. So depending on how you see it and what is your perspective, it will influence your fair value towards the company. So from there, then you have to decide yourself whether this is the risk that you want to take. No, this is an upside risk that you want to take, or this is the downside risk that you want to avoid. So it's entirely up to you.
Okay. We will take one question from the audience. This one is from Mil Supasit. Sorry if I pronounce your name wrong. Okay. So this one, Mil asks, what ratio would the panelists recommend to use as baseline analysis for any future IPOs? Maybe some of the ratios, some of the indexes that straight away you open the prospectus, you will go and look at that one.
Peter, you want to go first?
Yeah, maybe Mr. Money, you want to go first?
I think personally, when we talk about ratio, I wouldn't really specifically have any ratio for future IPOs. Yeah, because I would say that it's more important that you look at the ratio based on the industry rather than whether is it an IPO or not. Yeah, yeah, because like
correct.
Yeah,
because you value different industries differently. So it is not one size fit all kind of valuation method.
Yeah, but will there be any general common one that you will actually look up for? That I would say, for example, PE ratio is actually one of them. Yes, the percentage or the number of times might be different to different industry, but we will still also look at the PE ratio. Are there anything like that if we want to go and invest in an IPO stock or company?
Yeah, you would actually want to look at their gearing ratio. So the gearing ratio will show you how much borrowings that the company has, and if the company is overgeared, then obviously it means that it has to pay a lot of interest expenses. So that will lower down the profit of the business. But if a company is not geared, then you have to ask yourself, why is the company so lazy? Right? They could have borrowed money to grow even more. Why are they not doing that? So again, it is an art. You like a company that is geared or not geared. So it is also entirely up to you. So the point here is the ratios are really not important. The important thing is what you want, right? If you like a company that has a high gearing ratio because it means that it can generate high growth for the company, then go for it because that is what you want, right? And potentially that could make you a lot of money. And if I'm a very risk averse person, then I rather the company don't grow so fast, take their small step at a time, then I would prefer a company that is not so geared. So when I look for an IPO, I will look at the gearing ratio. I will find something that is as small as possible. So what ratio, it really up to you, and it's up to your imagination.
So that's why. So you must take your time and actually think about this, see what ratio will actually give you more confidence Simple as that. It's like you choose what car is actually more, you feel more confident. So there is no one size fit all kind of ratio kind of thing. Okay, we will take one more question before we can actually wrap up Uncle also want to rush and watch the Olympics already. Okay, so this question is from RBJ. Sorry if Uncle pronounce your name wrong. Uncle's English is actually from UK one, okay, so a bit different. UK, Ulu Klang. Okay, here is the question. Hi all, with an increase in SME financing and the growth of digital banks, would these trends be a good impact to the credit reporting industry? Are there any other interesting IPOs that we should look up for? Yes.
Who first?
Anyone? Mr. Money or Frankie can go and take this.
Go first.
I go first. I go first.
Okay. Yeah.
Okay. So with an increase in SME financing, okay, so when you talk about SME financing, it is a corporate loan, right? So for corporate loan, it is very hard to run. You cannot use your Grab app to to borrow money to grow your business, right? So very likely that you will still go to a bank. So in that area, companies like CTOS will continue to prosper because as more and more people become entrepreneur, they build SME businesses and all that, they will require that kind of business. So that from that sense, it is good for credit reporting company. But digital bank, in my opinion, the reason that people start digital bank is to address the unbanked population, right? Because they have no access to the traditional bank, so they have to go to a digital bank, and because of that, it's actually a threat to credit reporting. It is not a good catalyst to say that, oh, it will bring more business to them. So are there any other interesting IPOs that we should look out for? I don't have the IPO pipeline, so I'm not too sure, but just look out the SE and Bursa website. When there's a new IPO, they will always post up the prospectus over there.
Okay.
Yeah. I think for myself, my opinion is same as Frankie. I think at the end of the day, you all want to pay attention to one thing is that, like for example, right now you look at the digital bank, bidding the digital banking license, right? You will notice that all these players who are bidding for it, like Grab and so on, I doubt they need a credit score from CTOS. I doubt. I wouldn't say no, right? I'll just say that I doubt, right? And I think even if they need also, after a while, I think their ability to, outdo them is quite high chance. So there is kind of like a threat for me in that sense. Now, however, we can't be sure, right? Because at the end of the day, they may be able to play their game very, very well. But yeah, so there's two sides of the coin. Now, on the other hand, if we say about what are some exciting IPO, I think the only IPO that I know of that will be coming up, it's a logistic company, right?
Oh yeah. Correct.
Yeah. So there's a logistic company who recently filed for their IPO, who came out with their draft prospectus already. Yeah, and it's quite exciting. Yeah, because they have quite an exciting business model itself. So we had the privilege of actually talking to this company during our corporate day just a few weeks back, right? Early of this month. So maybe Frankie, you want to share a little bit on that? Just a very quick one.
Yeah, sure. So when you talk about logistics in Malaysia, again, like CTOS, it is a saturated market. There are so many players, but we only have 30 million population. However, many times you want to go online to do your shopping, right? It is still that limited number of transactions that you can make. So it is a very hard business to have organic growth in the sense. But this company, this IPO company, they have a very, very big vision whereby they want to consolidate the whole market. Because when you have too many players in a saturated market, right, your margin becomes very small. So in order to save the industry, you need to consolidate the market like the Three Kingdom in China like that. So they will conquer everyone. So in the end, maybe they were only left with big three. So the big three, each and every one of them will have a fairer share of profit in that sense. So this company has that vision. So therefore, they are doing IPO to raise money for potentially to do more acquisition, expansion, and stuff like that.
We have one more very interesting question. This is from me. Oh my God, uncle also don't know how to pronounce this. Mu Supasit. Maybe the growth is heavily leveraged because rates at the particular time makes it a more attractive option. I think this one is related to the ratio question raised previously. Yes.
Yeah. Okay, so the growth is heavily leveraged because the rates at the moment, particular time makes it more attractive option law. Okay, so the business really needs to know why are they borrowing the money for. If you borrow money for the sake that the interest rate is low, then the money is going to sit where? In your balance sheet as dead money, not doing anything. Then every year, even though the interest is cheap, you still need to pay, right? So unless you have a very solid business plan, you know what to do with the money, and then you go and leverage yourself, by all means go and do it. But if you just borrow money simply because it's cheap, then you'll be in big trouble.
Yeah.
Borrow money for fun.
Yeah.
Yeah.
Okay. One more last question before we actually wrap up. Okay. So we are talking about IPO stocks here. So you all know Apple, the company Apple, not the fruit lah, also fruit lah, but Apple lah. Huh? You know, Apple, right? They are actually trying to manufacture cars now. You know, they like want to follow Tesla. I don't know how true, but let's see. They are trying to follow Tesla to manufacture cars, but they cannot do it because they encounter one big problem. What is the big problem?
Must be another lame joke at this one. I don't know. I don't know.
Oh no.
I don't know.
Because Apple cars got problem installing Windows ma.
Good one. Good.
This
That's a good one. That's a good
This
one.
one a bit intellectual lah. Okay. Before we wrap up, let's just have for the audience to tapao a bit or bungkus something lah when they leave this webinar. So maybe you can give us 3 takeaways lah that the investors can actually look at before investing into, you know, an IPO stock or company. 3. Or maybe 2.
1 3 or 1% 3.
Maybe just 2. One from Frankie, one from Mr. Money.
Frankie,
Yes.
Okay lah, I go first lah. So I want to reiterate again, investment is an art. Okay. Just now I used the analogy of drawings. Now I'm going to use the analogy of wine tasting. So as a beginner, when you taste wine, this wine also tastes the same. This one also tastes the same. But then when you go to a professional, they can immediately tell you, oh, this one is rubbish, and this one is worth how much and how much, right? So for you as a new investors is that is just his opinion, even though he is a professional, right? You have your own taste and preference, and you must always remember that there are many people who actually have the same taste and preference as you. So be confident with your investment plans and your strategy, because if it is the right strategy with the right mindset, you don't take the stock market as a casino, then it's unlikely that you will go wrong one. So just stick with your investment strategy and plan. Over the long run, it's very hard to go wrong one. So far, nobody went wrong before.
Okay. Next takeaway.
For me, I think one takeaway is this: don't get too hung up upon all this PE ratio and whatnot. Yeah, pay more attention to business itself, right? There's no point of looking at all this PE ratio and like what. So most important thing is this: pay attention to the market that they are in, the industry they are in, the business side of their prospect, right? And don't just listen to people, study yourself. Yeah, that's very important.
So you all here know got 2 things that you must, don't, of course, when you look at any investment in IPO, like Frankie say, don't just, benchmark yourself with other people and all that. So choose those that is the right preference for you, and especially don't treat all this investment like go casino lah. And also Mr. Money also mentioned, I think the ratios are also a bit important, but it's not everything. So you must also pay attention to other external and also environment, the economic environment of this particular IPO exercise before you actually go and invest. Okay, Now it's already what time? 10:05. Ayo, uncle also want to go watch Olympic. I don't know whether these two young men, Mr. Money and Frankie, I don't know what is your plan on Friday night lah. But yes, thank you all for joining on this episode. Okay, we value your question very, very heavily. We like you to ask us more questions and all that. And don't forget if you like please rate this webinar 5 star. Once again, thank you everyone. Thank you, Mr. Money. Thank you, Frankie Lim. And thank you all for your questions. Stay safe. And Uncle want to see you all again next time. Thank you. Bye-bye.
Okay, good night.
Everyone,
Good night.
bye-bye.
Bye.
Okay, Uncle want to go watch Olympic. Bye-bye.